Hey crypto warriors, welcome back to Boni's Life. I'm your host, Boni, and if you're watching this on July 7th, 2025, you're about to get the most comprehensive 24-hour crypto trading strategy that could literally change your portfolio's trajectory. And trust me, after analyzing what's happening in the markets right now, you're going to want to stick around until the end because I've got some technical triggers that even the whales are watching. Before we dive into the technical analysis that's going to make you money, let's talk about what happened in the last 24 hours that's moving these markets. Because here's the thing. Successful crypto trading isn't just about drawing lines on charts. It's about understanding the fundamental forces that drive institutional money. And right now, we're seeing some absolutely fascinating dynamics. Bitcoin is sitting pretty at $108,807 as I'm recording this, up 0.69% in the last 24 hours. But here's what's really interesting. While Bitcoin is showing modest gains, we're seeing Ethereum surge 1.90% to $2,566. Solana pumping 2.22% to $151, and XRP climbing 1.37% to $2.25. This divergence is telling us something crucial about market sentiment, and I'll explain exactly what it means for your trading strategy. Now let's talk about the elephant in the room. Institutional adoption. BlackRock's IBIT Bitcoin ETF has just surpassed the S&P 500 fund in revenue generation. Let that sink in for a moment. The world's largest asset manager is making more money from Bitcoin than from the traditional stock market index that's been the backbone of institutional investing for decades. This isn't just a trend, folks. This is a seismic shift in how institutional money views digital assets. But here's where it gets really interesting, and this is where most retail traders are getting it wrong. While institutions like BlackRock are accumulating, they now hold 580,430 Bitcoin despite some Q1 outflows. We're seeing a concerning trend in spot market demand. Michael Saylor's MicroStrategy continues buying Bitcoin, but analysts are warning that these institutional purchases aren't offsetting the decline in spot market demand. This creates a fascinating dynamic that smart traders can exploit. Speaking of whales, here's a stat that should make you pay attention. Large Bitcoin holders have dumped over 500,000 Bitcoin in the past year. That's worth more than $50 billion at current prices. Meanwhile, institutions are quietly accumulating. This transfer of Bitcoin from individual whales to institutional treasuries is creating a new market structure that we need to understand to trade effectively. On the regulatory front, we've got some major developments that are creating both opportunities and uncertainties. The U.S. House of Representatives just delayed a key hearing on the crypto tax framework. And while some traders see this as negative, I'm here to tell you why this could actually be bullish for the next 24 hours. Here's the thing about regulatory uncertainty. It creates volatility, and volatility creates opportunity. We've also got a September 30th deadline for a crypto market structure bill that could impact Bitcoin and Ethereum regulation. But more immediately relevant for our 24-hour strategy, Congress is having what they're calling Crypto Week, addressing major digital asset bills, including the Genius Act for stablecoin regulation. Now, Christine Lagarde from the European Central Bank just issued a warning against stablecoin adoption, saying they threaten monetary sovereignty. Normally, this kind of regulatory pushback would send crypto markets tumbling. But here's what's fascinating. The market barely reacted. This tells us that crypto has matured to the point where individual regulatory statements from traditional financial institutions have less impact than they used to. All right, let's get into the technical analysis that's going to guide our 24-hour trading strategy. Bitcoin is currently testing a crucial resistance zone around $109,000, and the way it behaves at this level is going to determine our entire approach for the next day. Looking at the daily chart, we're seeing a classic cup and handle pattern formation, and if this plays out according to technical analysis principles, we could be looking at a target of $230,000. Now, I know that sounds absolutely insane, but let me explain the mathematics behind this projection. The cup and handle pattern measures the depth of the cup. In Bitcoin's case, that's approximately $45,000 from the previous all-time high to the correction low. When you add that measurement to the breakout point around $112,000, you get a theoretical target of $157,000 to $165,000 in the near term, with the extended target reaching $230,000. But here's where it gets really interesting from a technical perspective. Plan B, the creator of the stock-to-flow model, is pointing to Bitcoin's RSI surge as a signal for a potential 16% rally to $125,000 by the end of July. The RSI is currently approaching the 75 level, and historically when Bitcoin's RSI reaches this zone during a bull market, it tends to stay elevated for extended periods. During the 2021 bull run, Bitcoin's RSI remained above 80 for months, not days. This suggests that if we break above the current resistance, we could see sustained momentum rather than a quick reversal. Now, let's talk about some serious institutional analysis. Standard Chartered, one of the world's most respected banking institutions, just released their updated Bitcoin forecast, and it's absolutely bullish. Jeff Kendrick, the global head of digital assets research, is predicting Bitcoin will reach $135,000 by the third quarter of 2025 and $200,000 by year end. But here's what makes this prediction different from random crypto influencer price targets. Standard Chartered is basing this on concrete fundamental factors. They're pointing to robust institutional demand, evolving US policy frameworks, increasing ETF inflows, and expanding corporate treasury allocations. They're also factoring in the potential early departure of Federal Reserve Chair Jerome Powell and the likely enactment of US stablecoin regulatory legislation. Speaking of the Federal Reserve, this brings us to a crucial factor for our 24-hour strategy. The market is currently awaiting Fed minutes and any signals about future monetary policy. Historically, Federal Reserve rate decisions have consistently influenced Bitcoin prices, with rate cuts generally corresponding to price increases as borrowing becomes cheaper and investors seek higher yield alternatives. Now let's talk about altcoins, because this is where the real opportunities might be hiding. Michael van de Poppe, one of the most respected crypto analysts in the space, just stated that altcoins are severely mispriced and in a depression phase, setting the stage for a major bull run. He's anticipating what he calls a massive alt season based on the altcoin season index. Looking at the numbers, this makes sense. While Bitcoin has gained about 15% since the start of the year, many quality altcoins are still trading at significant discounts to their previous highs. Ethereum, for example, is showing strong momentum, with Van de Poppe suggesting it could reach $3,000 if it maintains support above $2,520. All right, now let's get to what you're really here for, the specific trading strategies for the next 24 hours. Based on all the analysis we've covered, here are the technical triggers and trading setups I'm watching. For Bitcoin, Our primary scenario is a breakout above $110,000. If we see a clean break above this level with volume confirmation, I'm looking for a quick move to $112,000, which represents the previous all-time high resistance. The stop loss for this trade would be a close below $107,500, giving us a risk-reward ratio of approximately 1 to 2. However, if Bitcoin fails to break $110,000 and we see rejection at this level, I'm prepared for a potential retest of support around $106,000. This would actually present an excellent buying opportunity for swing traders, as the overall trend remains bullish despite short-term consolidation. For Ethereum, the setup is even more compelling. We're currently seeing strong momentum above the $2,520 support level that Van de Poppe identified. If Ethereum can maintain this support and break above $2,600 with conviction, I'm targeting $2,750 as the next resistance level, with an extended target of $3,000. The beauty of the Ethereum setup is that we have multiple fundamental catalysts working in our favor. The upcoming US pro-crypto bills, including potential stablecoin regulation clarity, could significantly benefit Ethereum due to its smart contract capabilities, and the fact that many stablecoins are built on the Ethereum network. Solana is showing particularly strong momentum, up 2.22% in the last 24 hours. The technical setup suggests a potential move toward $160 if it can break above the current resistance around $152. What's interesting about Solana is that it's benefiting from the broader narrative around high-performance blockchains and institutional adoption of alternative Layer 1 protocols. XRP, meanwhile, is in an interesting position. Some analysts are predicting a potential blow-off rally toward $9.50 or even $37.50, representing gains of 455% to 2,000%. While these targets might seem extreme, XRP has a history of explosive moves during crypto bull markets, and the ongoing regulatory clarity around its status could serve as a catalyst. Now let's talk about risk management, because this is what separates profitable traders from those who blow up their accounts. Given the current market volatility and the mixed signals we're seeing between institutional accumulation and spot market demand, position sizing is crucial. For the next 24 hours, I recommend limiting individual position sizes to no more than 2 to 3% of your total portfolio per trade. This allows you to take advantage of opportunities while protecting your capital if the market moves against you. We also need to consider the broader macroeconomic environment. Economist Nouriel Roubini is predicting core inflation could climb to 3.5% by the end of 2025, potentially creating a mini stagflationary shock. While this might sound negative for risk assets, historically Bitcoin has performed well during periods of currency debasement and inflation concerns. Additionally, we're seeing ongoing trade tensions between the US and other major economies. Interestingly, cryptocurrencies have remained relatively resilient amid these tensions, suggesting they're increasingly viewed as a hedge against traditional financial market disruptions. Here's something fascinating that most traders aren't paying attention to: prediction markets. On Kalshi, traders are assigning a 67% probability that Bitcoin will reach at least $125,000 by December 31st, 2025. This represents a 10 percentage point increase in confidence over the past month, suggesting that smart money is becoming increasingly bullish on Bitcoin's prospects. So, what are the specific technical triggers you should be watching over the next 24 hours? First, Bitcoin breaking above $110,000 with volume. This would signal the start of the next leg up and could trigger algorithmic buying from institutional players. Second, Ethereum holding above $2,520 and breaking $2,600. This would confirm the bullish momentum and could lead to a rapid move toward $2,750. Third, watch for any unusual volume spikes in major altcoins. Given Van der Poppe's prediction of an incoming alt season, early volume increases could signal the beginning of significant moves. From a fundamental perspective, keep an eye on any Federal Reserve communications, congressional developments on crypto legislation, and any major institutional announcements. Remember, in today's market, news can move prices faster than technical analysis, so staying informed is crucial. For portfolio allocation over the next 24 hours, I'm suggesting a 60% Bitcoin, 25% Ethereum, and 15% high-quality altcoins split for aggressive traders. Conservative traders might want to stick with 70% Bitcoin and 30% Ethereum until we get more clarity on market direction. Here's the bottom line. Crypto warriors, we're at a fascinating inflection point in the crypto market. Institutional adoption is accelerating, regulatory clarity is improving, and technical indicators are suggesting significant moves ahead. The next 24 hours could set the tone for the rest of July and potentially the entire second half of 2025. The key is to stay disciplined, manage your risk, and be ready to act when the technical triggers we've discussed are hit. Remember, the best traders aren't the ones who predict every move perfectly. They're the ones who position themselves to profit when high probability setups present themselves. If this analysis helped you understand the current market dynamics and gave you actionable trading strategies, smash that like button, subscribe for daily crypto insights, and hit the notification bell so you never miss a market moving update. Drop a comment below with your thoughts on where you think Bitcoin is headed in the next 24 hours. I've read every single comment and often feature the best analysis in future videos. Until next time, this is Boni reminding you to trade smart, manage your risk, and remember, in crypto, fortune favors the prepared mind. See you in the next one.